Would you take a 50-year mortgage if it cut your monthly payment almost in half? So I looked into this proposal that's been making headlines. And here's what both sides are actually saying. Right now, the longest mortgage Fannie Mae or Freddie Mac will buy is 30 years. They're the two government-sponsored enterprises that keep our housing finance system running by buying loans, bundling them into securities, and stamping a guarantee on them. That's what keeps our rates lower and lending liquid. To make 50-year loans a reality, one of two things must change. Either Fannie Mae or Freddie Mac both would need to rewrite their rulebooks to start buying 50-year loans, or lenders would have to keep them in-house, which could mean higher interest rates and stricter borrowing standards. The supporters are calling it a way to fight affordability. They say longer terms, lower payments, they help more buyers enter the market, qualify, and make home ownership possible again, especially in places like LA or Ventura County. Critics say it's not affordability, it's just longer debt. They say you build equity extremely slow and pay far more interest, sometimes hundreds of thousands of dollars more, and they're not wrong. Then there's also the possible market effect. People think lower payments will revive the sluggish sales that are going on right now. Opponents warn it could push prices even higher if supply stays tight, canceling out any of the benefit that it brings. Economists are also split on the risks. Some argue lower payments could prevent foreclosures, others say it just stretches your credit further, inflating another housing bubble. And then there's the generational question. Some see 50-year loans as modern. You pass the mortgage down like the house itself. Others call it dangerous, locking families into debt that outlives their own careers. These are real things to consider. Even if this does happen, it would take major regulatory change from the Federal Housing Finance Agency, and investors would, without a doubt, demand higher yields to buy such long-term debt. That means it's not a quick fix. It's a fundamental shift that's going on. So here's the bottom line. A 50-year mortgage could lower your payments, but it doesn't solve your affordability. It just moves your cost further into the future. Does that make sense? So the real question is, would you take a smaller payment now knowing you'd still be paying it off in your 70s? Let me know what you think below.